Welcome to our Amazon case study series, and this is case study number 3. In these case studies, we look in detail into actual Amazon sellers' Seller Central data to find out what lessons we can learn so we can learn from their mistakes and profit from their successes. So let's get started. A bit of background first. This Amazon seller is in their first year of operation. They've got sales of $50,000 for the 12 months. Currently, they've got monthly sales of $10,000 a month, so everything's going well there. They've got 2 products with variations, and their niche is in a highly competitive market. I wouldn't suggest that anyone goes into this market, so it's an interesting case study in that respect. So let's just quickly look at what Amazon reports we got. First one we looked for is the Amazon business reports by date, sales and traffic by month. And we want some information from this. In particular, the essential columns are the date, the sessions, the units ordered, the total order items, the ordered product pages, sales, average selling price, and the unit session percentage. And we got those. If you go to the right-hand side of your Amazon Seller Central reports, you can bring up this column sections. You can just tick the ones that you need. So we downloaded that and opened up in Excel and started massaging the data. This report, this by date, gives you for all the products by date, but we want something more than that, so we had to go into the detailed product pages. So we also went to the business reports by ASIN, the detailed sales and traffic reports, which give us each particular product that they're selling. Now, the disadvantage of this, you can't get it by each month, by each product. So you have to go in, select which the relevant dates. So we took months and then downloaded those, opened them in Excel and massaged them. So let's have a look at the overview of the numbers on a top level. They've got a strong growth in numbers. Sales have actually been growing at 35% a month, and they also introduced a new product in July. So we can see that the black and the blue line are the same there. So we've got a slight deviation in September. That could be for a number of reasons. It's too early to tell whether there's a particular trend there. Just remember, sales is a function of sessions, the number of unique visitors to your product pages, times your conversion rate or your unit session percentage, which is the number of orders divided by the number of sessions, times price. So sales is never just something that occurs. You've got to get each one of these in place before you're going to get a sale to occur. So let's look at in depth into those session details, etc. So we can see that we've got this fairly slow start up until basically February. Now, sessions have been growing at an average of 32%, so we've got some really strong growth there through the period. Again, I mentioned it's come off in the last month, so that's a question there as to whether there's a problem, or it's just a seasonal variation to do with September. But so that's something I'll have to look at in future months. We can see the conversion rate is falling overall, but this initial conversion rate from October through to January was on pretty low volumes, and the conversion rate's basically stabilised at around 7%, which is low, but we'll discuss that later because we're still getting increased sessions. We've got this new product come online. They started off fairly slow. There's basically no sales there in the first month, but it's actually increasing now, sitting at 10%, so that's a good sign. We can see here he's been testing the price as we go along. It started at 10, dropped it down to 8, sat at 10 for a bit. But there's basically no sales going on through this period. And then he's been increasing that price, and he's been working at that price all the time. So he's always been testing for maximising profit, which we'll look at later because it's important. And we see with the new product, it's gone from $20 down to $15. Again, it's very low sales at this area, so it's a bit difficult to tell. But we've got the price stabilising at actually $15.95. So what we found, let's look at first the sessions and conversions. Sessions since January, sessions have been increasing, and conversion been stable. So we've got the blue line being sessions, which is going up, and we've got the unit session percentage, which is relatively stable. When we look at the price and conversions graph, comparing the two, I'm basically going to ignore this period before January because there was almost no volume there. We can see here that he's been increasing the price. There appears to be a slight deviation in terms of the unit session percentage or conversions associated with this increased price. It's a bit, we've got really 3 months there. There does seem to be a slight trend, but we'll look at that soon. And the important thing is here is, well, how is he positioned in terms of the market? So we did a Jungle Scout extract of the primary keyword that he's using the Jungle Scout Chrome extension. And these graphs are made using an Excel add-in that we created that takes the Jungle Scout data and sorts and analyzes and graphs the data so it's easy to read. This report shows that on this day, Jungle Scout revealed sales of 138 units per month, which is based on the BSR, which moves around a lot. And in the previous month, the sales were at 600, so it's a bit hard to tell. This is actually quite a competitive niche, and this BSR number was quite high, so the range is likely to go up to be slightly different anyway. And if we look through anyway, we're seeing we've got a lot of these competitors are actually sitting at fairly low, basically similar levels of sales per month, except for a couple here. Now, the green one is the market leader. In this case, the case study is ranked at number 14 on the first page, so that's pretty good. But we've got these other competitors. Even the main competitor obviously gets more sales in another area rather than this particular niche keyword. So if we look at the monthly revenue by page rank, again, we've got this major competitor. It's way ahead. It's doing close to $30,000 a month in sales. This shows that he's doing basically not very much in sales. The reality is it's up around the 10,000 mark, which is competitive, which is comparable to some of these other figures. Now, the Jungle Scout data, which we got this from, is really based on the BSR at any particular time relative to how that positioned to all the other products within that market and based on their formula. So, and because it's a higher BSR, it's likely to be out. The variation or the standard deviation is going to be higher. But this is where it starts to get interesting. The case study is selling at $15.95, and the rest of the market is really from $4 to $10, and there's one here at a similar level of price. But basically, the market leader is sitting at $10. So he's selling, over $10 more, almost 4 times more than the lowest price competitor. So we've taken this graph in relation to the Jungle Scout data and graphed it a different way that gives us some idea of the price elasticity of the market. And it's interesting to see. The major brand is out here. They are major brand. They're trademarked. They've got a patented product. Amazon's actually only one of their channels. They've got distributors to a wide range of retail stores, their own e-commerce site. And if we look at these other products, we've really got 2 other competitors here that are selling significantly more volumes. The reality is the case study here is probably sitting around this point, around the 600 sales a month mark. But let's look what happened with the pricing of the major competitor, because it's interesting to see what happened here. We got this information from Camel for the market leader and gives us a price history. And we can see here that the market leader has started to drag down the market, and basically everyone's followed. So they've pushed their price down to $8. They were sitting at the low price of $6.95. They were $9.89. Currently $9.89, but they've kind of pushed that down, and if we can see, the whole market's kind of followed them basically down into what I consider to be uncompetitive positions, and we'll explain that shortly. So the gross profit rate for this product is actually really good. It's currently sitting for August. It was sitting at $4,500 a month. It's sitting at a nice, healthy 45% gross profit rate, which means they've got money to be able to reinvest in extra stock. So the reason why we're seeing competitors not really gaining any traction is I suggest they're probably running out of stock along the way because they've got such low gross profit rates. And he can also afford to spend money in advertising. So let's look at the market position. Our question here was, well, should we be actually pushing our price down to try and sell in this area and get more volume? And interesting question. They've got a price here, which, to be honest, they're almost more profitable than most of the other markets, most of the other products, except for the market leader. We put these numbers into our Amazon cash flow spreadsheet, which you haven't got that, I suggest you download it. It's available on our site. And we put in the variables here. So we've got the case study and the competitor, and we've assumed that the competitors kind of, what happens if we sold it at $10 a unit rather than at $14.95? And here I wanted to look at what the cash flow effect was. So this is the key performance indicators, or KPIs, that we get from that spreadsheet. So the gross profit rate of 43% compared to a gross profit rate of 22%. I just haven't included anything on advertising here for the moment. And we're going to assume that they're currently doing 600 units a month, the competitor's doing 1687, and we're going to have a growth in volume of 10% a month, which is actually quite a bit. So if we look at the total sales for the year, the competitor would have twice the amount of sales, but less profit. And if we look at the maximum cash flow needed using this spreadsheet, which assumes actually that you've got a really efficient inventory system in that the inventory has been replaced basically the same day it runs out, so which is not really a viable alternative there, but it's the basis we've used for this cash flow spreadsheet. And we can see that they actually need another $5,000 more cash invested in the business to get to that point. The monthly cash flow at the end of the year is higher. They've got also, the important thing is, they've got less inventory in stock at the end of the year. So they've only got $6,000 worth of inventory versus $20,000. So the product that is selling cheaper, they're selling more, but they've actually got a higher degree of risk because they've got a greater degree of inventory held up. I mean, their risk if something happens, something bad like their product getting banned or seller account being banned, then they've got $17,000 worth of stock that they've paid for that's in a risky position, whereas these guys have got half as much at $6,300. So if we go back to the market position of where these companies, he's only really got a couple of competitors because all these businesses aren't making enough money to be able to reinvest in the business. They're kind of just struggling. So the main competitor dropped their price down from $16, $15, and they've dropped it down. The rest of the market's followed, hoping that that's what they need to get the sales. But basically, they are in uncompetitive positions in terms of the product. Now, the thing to remember is some of these products may be coming from, say, Chinese sellers. You hear a lot of people worrying about whether there's Chinese sellers in the business and how they're undercutting everyone and we can't compete against them. The Chinese sellers still have predominantly the same level of costs as what you do. They've still got the same FBA fees. They still get charged 15% from Amazon. They've still got freight costs. And the only difference is the unit cost, of which, if they're a manufacturer, then they've still got this massive overhead of actually building the product. Even if they are a manufacturer, they should be considering, one, a profit for the manufacturing before they sell it on to, say, their wholesaler. So looking forward, let's see what we can gain from this. The profitable product and cash flow will enable them to keep on developing new products and keep their inventory up to date. Cash flow is the most important thing in any business. It's the prime focus of every business, and every bit of business education, everything else is really tied to the end object, which is cash flow. The business with the best cash flow wins. Basically, it's worth more, it can outcompete products, it can develop new things, it can resist change. It's shown that they can compete with low-price competitors who are most likely going to fall out of the market because they can't maintain that position within the market. They can't afford to replace stock when it's needed. And so a lot of these competitors are basically going to fall away. You're going to get new ones come in, and that's going to be a problem. But I think the focus of keeping the profits and focusing on that is more important than getting the badge for the bestseller. They need to pay attention to their conversion rate and keep on testing. Brand and perceived value will be obviously important there. That's probably one of the main issues they've got. If we looked at that September figures, which is only 1 month, and it's not a great month from what I've seen across the range from a number of people, we just want to check that that's not causing a problem into the future. But they do a lot of split testing on things to be able to understand and try and keep that position competitive. And then there's no need to chase the bestseller based on price, which leads to greater levels of risk, level of inventory. Okay, if you want to keep up to date with our case studies, fill in the form below and we'll keep you up to date with our emails or when the next case study is coming out.